when I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that?
SoFi has officially entered oversold territory.
Okay, you can stop selling.
But it's not the only one getting wrecked right now. The Nasdaq Composite Index, Dow Industrials, and S&P 500 have also been taking their fair share of a beating. Even the US Treasury bond has been downtrending over the last couple of weeks.
Calm down.
And yet, SoFi's head of investment strategy, Liz Young, isn't the least bit surprised.
I'm surprised that it's the lowest percentage we've seen, but I'm not surprised that people aren't feeling particularly optimistic about stocks. We keep talking about a recession coming. We keep lining up all of these things that are in our face. What I am actually a little bit surprised about is that there's so many people that are still wanting to invest in real estate at a point where housing affordability is going down and we've got rates rising and home prices are at all-time highs. So that is probably the most surprising aspect for the whole survey for me.
So Liz is or isn't surprised. Let's discuss some of Liz Young's important reminders during market crashes, which may give us a glimpse as to where SoFi stock is going. Just a disclaimer though, if you haven't already noticed, we are not financial advisors and none of this is financial advice, so always do your own due diligence, or as we like to call it here on the channel, doo-doo. As we get older, there's usually many regrets in life, like I should have traveled more, I wish I had a better relationship with my children, I should have signed up for Wealth Gambit's Patreon during its 10-day launch. Oh wait, you do have control over the last one. Our Patreon is closing its doors today on the 30th, and we don't know when we'll be opening it back up, if we'll even be opening it back up. So for you die-hard SoFi investors and Wealth Gambit subscribers, we have a SoFi private Discord and private SoFi investors Facebook group with a great positive SoFi community. And we shout out every single one of our Patreons in every single video, so long as they are an active member, and many more bonuses. Check the link in the description or the top pinned comment to join before we close it on the 30th.
All right, let's roll.
A bombardment of news about looming recessions coupled with inflation, multiple interest rate hikes, and conflict between Russia and Ukraine could give many people the impression that the stock market is one of the last places you want to be at this moment in time. As Liz Young said, it isn't too surprising that people aren't too optimistic about stocks right now. In a podcast titled Looking at the Current Inflationary Environment with Liz Young, she argued that a lot of investors today haven't experienced a rate hike cycle.
I think that there's been a lot of narrative about, new investors haven't seen a rate hike cycle. You know what? There's a lot of investors in the market, almost all investors in the market, that haven't seen this environment. And I think that this year is going to be so interesting to watch because I don't think anybody has an advantage.
Inflation greatly lowers the dollar's buying power, and this is scary from a consumer's point of view. But should investors be afraid too? Let's take a look. Dow Jones market data studied 5 recent rate hike cycles starting from 1994 to 2019. Their analysis shows that the 3 biggest stock market indexes, Dow Jones, S&P 500, and Nasdaq, climbed up in the last 4 rate hike period, and there's only 1 in decline. You might be thinking,
the stock market is crashing.
That is at least what we're seeing right now. From what we can see from this illustration, there have been moments in the past rate hike announcements where the S&P 500 declined the next day after the announcement but ended up being back in the green after a month, and vice versa. The market can be quite unpredictable, so you know what they say, time in the market is better than timing the market. This is what Liz Young had to say about this.
Seen before, if you look historically, when a hiking cycle begins, you don't see a firming up in technology and some of those higher growth names until after the hikes start. So I would still wait that out a little bit longer, and then I'd be real.
The long-term and short-term effects of the Fed's rate hike seem to show a different set of results and still conclude rate hikes aren't a bad thing when you're a long-term investor.
Hold the bag, stupid.
Now, the billion-dollar question. How does this affect you as an investor in these extraordinarily turbulent markets?
And then I'd be really choosy about it. You have to choose high quality growth, and you have to choose growth that has earnings momentum behind it. Earnings are going to slow this year. The growth rates are going to slow. GDP growth is going to slow compared to last year. That doesn't make it bad. That doesn't make it weak. It's just a different part of the business cycle. So the market is going to have to really search for opportunities and find things that are durable through this part of the cycle. And I think that we're still up against quite a few headwinds here in the first half. As we mentioned, inflation's still an issue. I don't think that this crisis helps that issue at all. I think the Fed still has to act, and all this has really done was take the expectation of possibly 50 basis points back down to 25 basis points. But regardless, we're still in a hiking cycle. We still have headwinds for growth stocks until we get some of that beginning out of the way.
April 14th, when SoFi stock closed at $7.26 per share, it officially entered the oversold spot. We know what some of you may be thinking. Oversold? What does that even mean? According to the Relative Strength Index, or RSI, that hit 29.98. Now, some of you might be wondering what the RSI is, so here's a little doo-doo. According to Investopedia, RSI is a momentum indicator of whether the stock is overbought or oversold. A stock is considered overbought when the RSI is above 70% and oversold when it is below 30. Now, technical analysis isn't always accurate at the end of the day, and the stock market is a wild beast with a mind of its own, so take this with multiple grains of salt. So what does it mean for SoFi investors when SoFi stock is officially oversold?
Okay, well, sit tight.
Listen to this.
Investopedia also suggests that generally, when the RSI surpasses the horizontal 30 reference level, it is a bullish sign, and when it slides below the horizontal 70 reference level, it is a bearish sign. SoFi's 29.98 RSI could be a sign that the recent heavy selling is about to end, and we might be seeing a beginning of a buying period. With the current market sentiment, Liz Young is clearly not surprised that people are feeling the way that they're feeling about the stock market. A negative market sentiment and a market in decline are a recipe for some red in the portfolio. Now, as to whether or not to buy or sell. First off, we are not financial advisors, so we can't answer that question for you. However, we can give you our non-financial opinion. If you are long any companies, buying them at a massive discount is obviously better than buying them at a massive premium. One of the biggest mistakes that we see that is widespread in the investing community is that people often look to the price of an asset to determine whether or not it is a good asset or not. But that's just not the case. There are plenty of bad assets that are horribly expensive, and the opposite is also true. The fact that asset prices like our precious SoFi can swing so immensely in such a short period of time should be sign enough that stock prices during certain periods of time can have no relation to how the company itself is doing. In fact, the best times to buy are often when the company's stock price is getting absolutely wrecked. I know we've used this analogy before, but if you could buy the house that you're currently living in now for 1/10 the price, would you do it? Or is it that because your house is 1/10 the price, that it is 1/10 the house? Is your bathroom gonna be 1/10 smaller if it's 1/10 the price? Probably not, because it's the same house just for 1/10 the price. But then again, we're just some people on YouTube. Always do your own due diligence. 2022 is really giving 2022 vibes. Am I right? Here's the kicker though. We made a bag in 2020. The market crashed and we gobbled up shares for literally pennies on the dollar. We here at Wealth Gambit feel the same thing is happening with SoFi right now. And so we will be adding to our position any chance we get. What will you do? Let us know in the comments down below. Special shout out to the ladies and gents in our Patreon community. It wouldn't be a Wealth Gambit video if we didn't shout them out. So thank you for making these videos possible. Arthur Magazu, Wei Chu, Pietro Serra, Daniel Corbett, Jordan Worth, aka Mr. Welfare, Casey Patel, Jeff Sherman, and Gregory Villar. And by the way, Gregory actually has a travel YouTube channel, so be sure to check that out too. And shouts out to the newest member of the Patreon family, John. You guys are awesome, and you truly help to make these videos possible. We really appreciate you all. Now, just a final reminder, the doors to the Patreon are closing on the 30th, so if you do want to get in, make sure to check that out before we officially close the doors. And to all of you that are watching, if you found any value in this video whatsoever, please smash that like button for the YouTube algorithm and subscribe if you haven't already. Even that little smashing of the like button helps tremendously with the YouTube algorithm, so we greatly appreciate it. Anyways, until next time, peace.